Hello and welcome everyone to Almus Market Mornings, your daily dose of financial updates. This is your host Swaraj, and with me I have Pankaj, and we will be taking you through the latest updates for the day. Now we have seen Japanese yen drop to its lowest level since 2015. Germany has said it might stop buying Russian oil and coal as early as this year. And on the US front, President Biden proposed a $5.8 trillion budget for 2023. Pankaj, what other developments have we seen in the overnight markets?
Basically, we should be now watching the market more in a line of what quarter adjustment, month market adjustments, and in Indian context, is a financial year adjustments. So as we enter the last few sessions of the quarter, month market moves are driven by position adjustments, short covering in some cases, profit booking. US stocks have been falling in this quarter, which has recovered marginally in yesterday's sessions also. And we are seeing a good amount of corrections in oil prices. And this coming on two kind of a conversation happening. One is ceasefire in Ukraine, Russia, where people are anticipating that it will be very soon, which we are actually expecting for last now almost 32 days. So that's the way markets are. And another thing is China's policy of a zero COVID cases. They've entirely locked down Shanghai now for mass testing of coronavirus. So this has basically impacted the oil. Now, the other important thing which is happening in global market is the JPY, Japanese currency. Now, it has hit 7-year high yesterday at 125.10. Now, Japan is a one central banker which are actually now also again saying that they want to buy unlimited amount of bonds at a 10-year yield of around 0.25%. So they want to cap at the yields. They are managing entirely this because their inflation levels are still in the control. So we don't know how it will monitor, but Japanese how it will happen. But Japanese yen is a very, very highly correlated currency with the weak. Whenever the dollar yields strengthen, Japanese currency weaken. Now, another asset which is getting impacted by is the higher yields, it's gold. Now, almost all markets are showing a higher yields. So when US 10-year is around 250, Eurozone yields have also moved higher. Eurozone markets, short-term money markets have started pricing. They're around 50 to 60 basis rate hike within this year. So with these kind of a pricing is basically giving a kind of a negative sentiment to gold. But when we watch ETF data and all those things, there's a continuous buying happening in the gold. Now coming back to the most watched economy, which is US, and in US also, the more markets are creating a lots of havoc these days. US Treasury yield curve has been continuously flattening, with parts of its inverting as investors price in aggressive rate hikes planned by the Federal Reserve Bank to attempt to bring down inflation, which is at a 40 years high. Whether it can be termed as a recession, earlier this has been indicator of a recession. The most watched spread between 10-year and 2-year narrowed down to 6.5 basis. This is at the lowest level since 2020 when the US started cutting rates. The other parts of the yield curve, such as 5 to 10 and 30 years, are already inverted. Coming back to India, there is not much movement in the Indian yield curve. 10-year GSEC is dealing at a 684. And now they will look forward for auction calendar, which is likely to be announced within this week, and MPC meeting in the month of April. Our currency, rupee, benefiting short term due to the seasonal flow and some more corrections in oil prices. We could retest 75, 70, 80 area, which we saw during Holy Week, might seem again, but eventually fundamentals would dictate to the rupee to weakening towards 76, 80, 77. So let's see whether RBI establishes a new zone for dollar rupee within 75 half or 77, 77 half for the coming quarter. That's all from me. Thank you.
Okay, that was great, Pankaj. As Pankaj said, we are entering the final few days of the financial year, and there will be some sort of position adjustments being taken place. So guys, continue to manage your risks. That's it for today. I'll see you all tomorrow.